Hi learners, myself Mrs. C. Suganti, Assistant Professor, Department of Business Administration with Computer Applications, St. Joseph's College of Arts and Science for Women, Ozur. Now, I'm going to discuss with you about capital. What is meant by capital? Fund required for a business is called capital. It can be classified under two main categories. What all the two main categories means? The first one, fixed capital. Capital required for purchase of fixed assets like land, building, machinery, office equipment, furniture is called fixed capital. And the second is in working capital. Capital required for purchase of raw materials and for meeting the day-to-day expenditure on salaries, wages, rent, advertising, etc. is called working capital. And the next is an concept of working capital. There are two concepts of working capital in that the first one is an gross working capital. In a broader sense, the working capital refers to the gross working capital. This represents amount of funds invested in current assets. Then second one is an net working capital. In a narrow sense, working capital refers to net working capital. Net working capital is the excess of current assets over current liabilities. And the next is in factors determining working capital needs. In that, the first one is in nature of business. In the case of public utility concern like railways, electricity, most of the transactions are on cash basis. Further, they do not require large inventories. Hence, working capital requirements are low. On the other hand, manufacturing and trading concern requires more working capital since they have to invest heavily in inventories and datas. Then the second one is in size of business. Generally, large business concerns are required to maintain huge inventories for the flow of business. Hence, bigger the size, the large will be the working capital requirements. And the third one is in time consumed in manufacture. To run a long production process, more inventory is required. Hence, the longer the period of manufacture, the higher will be the requirements of working capital and vice versa. And the fourth one is in fluctuations. A number of industries manufacture and sell goods only during certain season. For example, the sugar industry produces particularly all sugar between December and April. Their working capital requirement will be higher during this session. It is reduced as the sales are made and cash in realized. Then the next is in fluctuations in supply. If the supply of raw materials is irregular, companies are forced to maintain huge stocks to avoid stoppage of production. In such case, working capital requirement will be high. And the next is in speed of turnover. A concern, say, hotel, which affects sales quickly, needs comparatively low working capital. This is because of quick conversion of stock into cash. But if the sales are slow, more working capital will be required. And the seventh one, terms of sales. Liberal credit sales will result in locking up of funds in sundry debtors. Hence, a company which allows liberal credit will need more working capital than a company which observe strict credit norms. And the next is in terms of purchase. Working capital requirements are also affected by credit facilities enjoyed by the company. A company enjoying liberal credit facilities from its suppliers will need lower amount of working capital. But a company which has to purchase only for cash will need more working capital. And the next is labor intensive versus capital incentive industries. In labor-intensive industries, larger working capital is required because of will heavy wage bill and more than taken for production. But the capital-intensive industries require lesser amount of working capital because of heavy investment in fixed assets and shorter time taken for production. And the next is growth and expansion of business. A growth concern need more working capital to finance its increasing activities and expansion, but working capital requirements are low in the case of static concern. Then the next is in price level changes. Changes in price level also affect the working capital requirements. Generally, the raising prices will require the firm to maintain large amount of working capital. This is because more funds will be required to maintain the same amount of working capital to maintain the same level of activity. Then the next is in dividend policy. The dividend policy of a concern has a dominant influence on the working capital. A firm that maintain high rate of cash dividend irrespective of its generation of profits needs more working capital. On the other hand, a firm that follows conservative dividend policy remains large part of its profit needs less amount of working capital. And the next is in operating efficiency. Efficient and coordinated utilization of capital goods reduces the amount required for working capital. And the last one, level of taxes. The level of taxes paid depends on taxation laws. These amounts have to be paid in advance. Thus, the need for working capital varies with tax laws and advance tax provisions. Thank you, learners.